Hi, welcome to this video today, which is on the 17th of October. It's Saturday. I'm just going to be taking a look at the euro today. I'm going to be looking at it against the USD and also the JPY. And we'll look at a couple of euro correlated currencies as well against the USD. We'll go to the charts in a moment. Now, in terms of euro USD in particular, we haven't seen much volatility in this pair over the last few months, but that is now about to change in our view, and it could happen in the coming week. The fundamentals have now turned bearish for the euro in our view. Speculators are heavily long, and we're expecting them to exit on stop and trigger a big move to the downside. In terms of the technical levels, clearly defined levels of support and resistance. If our view is correct, it's a really good risk to reward trade. Now, in terms of all the trade setups, let's go and take a look at them right now. But just before we do so, please do keep in mind, it is my view as of right now. It can, of course, change in line with the market conditions and action. If you want all our trading techniques, our daily technical sentiment analysis of 14 Forex pairs, all you need to do is click on the link beneath this video and you'll get live access to our member center. You can also follow us on Facebook and join our Facebook group of traders. Now, the trade setup we're going to look at first of all is euro USD, and I just want to start off by looking at the sentiment towards the euro from our favorite sentiment tool, the COT net traders positions. Then we'll draw some levels of entry, stop and target. Right, sentiment chart, sentiment graph of the euro against the USD. This is our favorite tool for measuring sentiment. It's COT net traders positions, and this chart comes from freecotdata.com. Now, for anyone unfamiliar with the COT net traders positions, I'm just going to go through briefly how we use them here. You can check a video on our channel for more in-depth view, which is called COT net traders indicator. Now, in terms of the chart, you've got two groups at the bottom. Dealers, they're in green, they're smart money commercial hedgers, okay? And on the other side, you've got speculators. Now, the way we use this report is really to look for big divergences between the two groups. I'm not interested in every twist and turn on the chart, but what you can see is I've highlighted two divergences. One back in 2017, where specs built up a really big long position. The euro topped out and then fell by 1,000 pips, okay? The divergence now is very similar to the one we've got here, and we're looking for the euro to move down, okay? So it's not a timing tool, but it can warn you of a big trend shaping up, and I think there's a big downtrend shaping up in the euro. Now, before I go to the chart of euro USD, I just want to show you two other graphs or charts which relate to the virus impact, which is very important in terms of the outlook for this pair. So let's take a look at the two charts. Right, first chart in terms of the virus. Now, in terms of speculators, they built up a big long position, and a lot of those longs came in because there was a belief that the virus would have more impact on the US economy than the European economy. But that's all changing. You can see it from this chart here, which is daily change in fatalities per million. We've got Spain here on the rise. US has leveled out, okay? Now, in terms of other nations, this is France here on the way back up. UK is in here as well. It's not part of the Eurozone, but cases on the way up. Cases on the way up in Italy and in Spain. Now, in terms of how important the virus is to the euro USD, the next chart graphically illustrates it. So just shift over, take a look at the next chart. Right, this is a really, really good chart in my view. It comes from Macrobond and Nordea. And what it shows you is the darker line is corona cases USA minus EU, excluding UK. And when cases are on the way up in the US, look at the euro, goes higher. Now, of course, cases in the US have rolled over. This line is falling away. This line should play catch up, okay? Or the euro USD should go down. Now, the virus is obviously very important in terms of this pair, but there's other factors that are going to hit the euro as well. So now what we're going to do is we're going to go and take a look at those other bearish fundamentals and draw levels of entry, stop, and target. Right, Euro USD, we'll draw the technicals in a moment. As you can see, over the last few months, not too much action. But this is about to change, obviously, in our view. We'll draw our levels in a moment, but I just want to look at the Euro bearish fundamentals I've written down here. We've already noted COVID. It's already impacting on Eurozone economic data that's coming in weak and below forecast. If you look at US data, it's generally been better than Eurozone's recently. I'm not going to go through all the data. You can look it up for yourself. Yeah, market view that the Eurozone economy do better going forward is not supported by fact now. Now, in terms of the inflation outlook, I think this is very important. Eurozone actually risks deflation. That's a nightmare for a central bank. Okay, so the ECB, which is obviously the central bank, has to act, and they've already indicated what they're going to do. They will add to stimulus, so print more money, which is obviously bearish for the euro. And you can see in bond yields, they're already reflecting this. Okay, and in terms of bond yields going down, that is bearish for the euro as well. Now, in terms of the stimulus, it will be ineffective due to the structural problems within individual countries. So Eurozone basically faces a real slowdown in economic growth, and I think it's going to go into recession. Okay, now in terms of the euro, it has had some additional support by risk on in the markets. We've seen stock markets being pretty firm. That's helped the euro against the USD, but got the potential for risk off as the US elections are only 2 weeks away. Now, at the moment, the market is saying, well, yeah, Biden's going to win. That's going to be good for risk on, bad for the dollar. That's factored in the price, and we don't go with that view at all. We think it's going to be a close result, the election. Whoever wins, the loser will contest the result, which will leave the US potentially without government while lawyers in the Supreme Court sort it out. So I think that could really come into play as we move closer to the election date. Investors will become cautious. So I think in terms of the euro, the fundamentals obviously are against it now. And we know there's a large number of speculators long. They did build up their long position here. You can see what happens with the price action. Kind of trying to get through this 120 level here. Can't quite get there. Then we poke at it. No more buyers. Down. Then we kind of fall down again to 116. Then we come back to 118 here. And now we're rolling over again. So if we're looking at the technicals, we can keep them very, very simple because we know what's going on behind the chart. And I'm going to say, yeah, the first level of resistance is a round number. You're going to be looking at 118. Okay. Draw trajectory. So that's really your first big level of resistance, a round number. Then the second level is just behind. It's one round number back. So there. So that's just below the 119 level. So any stop should be behind the 119 level. Ours in the member center is at 119.30. Okay. So in terms of getting into the trade, if you want to get into it, where would you get in? Yeah, this is a kind of half-hearted rally. Now we're falling away to the downside. If you look at the price on Friday, we closed at 117.30. I'd like to see the round number give way, which is 116.80. So through here, basically. Now, we know that speculators are heavily long, and from our experience of the COT, we can judge how far prices may go. I'm going to say 112. That should be on the cards just with specs coming out in the market. You can see it's where we broke up here. We kind of steadied and then really pushed off. Okay, so down towards the 112 level. But because, yeah, we're so bearish of the euro, I think we can run on to 110, which is a big support level as well on the weekly chart. So there. So, yeah, you've got good potential downside, potentially 700 pips. Okay. Now, in terms of the last time we had such a big divergence between speculators and commercial smart money, we fell by 1,000 pips. So this is not unrealistic. Now, you do have the possibility maybe the euro will chop around sideways or whatever, maybe show a little bit of strength, but I don't think it's got much upside at all. Obviously, the swap is not against you. The swap's in your favour if you do Euro USD. Yeah, what we've got, small position in, I'm going to add. Okay, so as soon as we see prices starting gaining, or prices gaining traction to the downside, we'll put another trade in. Looked at the euro obviously in a few previous videos, looking for it to break down, and I hadn't really done that much. Okay, you can say it's got a little bit of a bearish bias, but no real big action on the downside. I think in the week ahead, we could finally get a really big breakdown in Euro USD. So we shall see, but it's an attractive risk to reward trade. And the minute the stop's back behind the second level, if we break lower, okay, stop can come in behind this level here, the 118 level, okay? So it's a really good risk to reward trade. It's about 5 to 1, isn't it? Or a little bit more than 5 to 1 to the second target. Obviously, you manage the trade as it goes, but I think we are getting ready for a move down in the euro. Right, let's go now and take a look at euro JPY. This is euro JPY. I'm just going to use charts from our member center for the last few pairs. We've already gone through the euro fundamentals. We're extremely bearish of the euro. Now, in terms of the yen, it is a safe haven currency. It's like the USD. It will gain on risk off, okay? Also, the fundamentals for the yen, markets just sold it off too hard. I'm not going to go through all the yen fundamentals, but the yen very oversold against numerous other currencies, and we think it's going to have a rally, not just against the euro, but against other majors as well. But in terms of the euro, got up here, topped out into the 126 level, came down, and then we have the rally back to 125, okay? And we fall off the level, and then on Thursday, Friday, two small little candles. We're now below the 124 level. I think the euro is a sell, and in terms of our reading of the sentiment and fundamentals, we should get down to 118, okay? So 550 odd pips in terms of profit potential. If we got really big risk off, that could become more, because we could run down to 116 or 114, but 118 is the target at the moment. It's kind of a nothing trade for us at the moment. You can see we're in at 124.50, 123.49, so just 100 pips, but I'm looking for this one hopefully to become a big winner. If we moved above 124, you could just sell back through the round number, okay, stop behind 125, or if we don't rally, and it's only like 49 pips to break the round number, so say 122.80, you could come in on weakness, and yeah, I think it looks a good risk to reward trade. In fact, yeah, if I wasn't in this market already, I would just basically sell at market, okay? So yeah, it's a good looking risk to reward trade. I think it's around 4 to 1. And yeah, if we do move down, obviously our stop is behind 125. If we penetrate the next round number, we'll bring it behind 124. So yeah, looks pretty good to us. And in terms of the euro, regular viewers will know this. If we're bearish of the euro, we're looking at the proxies or the correlated currencies, because they will very often go down quicker than the euro, which means you might get more profit out of the correlated proxy currencies than the euro itself. And there's some nice looking euro correlated currencies to sell. So let's go and take a look at them. All right, first of the proxies is USD PLN, so the US dollar against the Polish zloty. Let's look at that pair, but you probably got it on your platform, and I really like the look of this one. The USD did rally up there, then we came back down, and we're going to take this candle here at 382, come up, come up, come up, going up to 420. Now our stop is behind this level at the moment. If we move on to the upside, we'll bring it up behind this level. Now, in terms of why will, let's say, the Polish zloty get hit hard if the euro falls? Well, if you look at Poland, it's export orientated to Eurozone. It lacks internal consumption. Okay, so if the Euro zone economy goes down, Polish zloty or Polish economy will take a hit. It's a so-called weaker credit, and weaker credits tend to go down quickly. So yeah, looking quite bullish in our view. or looking really nicely bullish, I should say. Looking for more upside. Our target is 420. Now, in terms of the next euro proxy, this is USD Norwegian krona. And again, it's similar. The USD has that big rally, come down, then we base, get in long. We should run to 10. Okay, we could even run to 10.50. Risk off will hurt all the proxies. Okay, one thing I've got my eye on in terms of the Norwegian krona is keep in mind Norway is Europe's biggest oil exporter. And let's have a look at crude oil. Crude oil basically has been kind of untradeable, really. Low volatility, down, back up a bit, and just kind of chopping around. The only fundamental supporting this market, in our view, is a weak USD. The USD gets stronger generally, it'll smash crude, and I think we should go down to 30 or 20. That's really going to weigh on the NOK. So keep your eye on crude oil in relation to the NOK. Let's go to the next pair. Next pair is going to be, if I can find it, the Swedish krona. And this one we've been interested in for a while. Again, you get the big rise up in the dollar. Then we have the big retracement, but it bases into this level of support. We base into the level of support, and now we're moving up. We've now gone long. It's a nothing trade at the moment. We break this level, we should be straight off to 950. Okay, we could even overrun. Now, what I like about the SEK is it has been one of the strongest currencies over the last few months, just generally. Okay, so it's overbought against numerous other currencies. Speculators are heavily short the USD. And when I read reports about where this pair is going from banks and brokers and so forth, there's no real dollar bulls. They're expecting the USD to go down to 8. Well, I personally think get the breakout, we'll be going up to 950. Maybe we'll go to 8, but I think we're going to get that rally first of all. Again, an attractive risk to reward trade. And the last euro proxy is going to be the Eastern European cousin of the Polish zloty. This is already an uptrend in our view. Came up quite nicely there, came back. Hammer support, just a bit of sideways action, just a natural correction. Now we're working our way higher. Just a breakout here. We should go off to 25. We could go even higher. Our stop is behind here at the moment. We'll bring it up behind first level on strength next week. Now, in terms of the proxies, I always think they're worth trading. Lesser looked at. Also, you get less speculative action in them. So Euro USD, you've got a lot of institutions hunting stops, etc. The proxies, that isn't such a problem in our view. Now, which is the best proxy? I'm not sure actually. I think they all look good. We're doing them all as one trade. We just split the risk between them. I've actually put a slightly bigger risk exposure on the SEK. But yeah, all the trade setups in our view look good. The euro itself has been a bit boring over the last few months, but I think that is going to change. And the odds for us favour downside in the euro and downside in the proxies. Right, that is the video for today. Thank you very much for watching. Take care and have a good day.